Hi, I'm Tanya Mitchell. I have been helping sell LearningRx franchises since 2002. I was able to get my certified franchise executive, which is semi-like master's in franchising. And if you have any questions regarding LearningRx, I'd like you to email me, tanya@brainwise.com, which is the sales division of our company. So we're doing this webinar today, and I'm going to introduce you to a guest that's going to be very helpful for you. But we put out a survey about a month ago asking, what is the single biggest obstacle preventing you from starting your own child education, brain training, tutoring business? And there were several different reasons, but the majority of issues that they were having, or biggest obstacles, was 64% wanted more information on financing options. So financing was a really big question. And I have known Diane many years. In the last couple of years, she is the #1 person that I refer people to when they're looking for franchise funding. So today, I asked her to join us so that we can give you some information and sort of help open up that area so there's not as many questions. And then hopefully you can speak with Diane and look at your own personal options. So I'd like to introduce you to Diane. And we're going to be talking about estimated initial investment of a LearningRx center, which you can see here. This is the estimated initial investment, anywhere from $90,000 for a micro, the standard franchise. So most people need to raise about $149,000 available to them. And this gives you an idea of what those fees are. So you have a $25,000 franchise fee, a $10,000 training fee, and then a $25,000 marketing launch. And that goes into an escrow account. And then we have a marketing coach work with you on a weekly basis over the first year to make you a marketing expert in your area. So that's $60,000 in liquid that our franchisees need when they start with us. The rest of the money is actually for building up your center, paying employees, getting some inventory. You can see there's $50,000 of additional funds set aside. And so it just gives you a quick snapshot of the investment and where that investment goes. And so I'd like to introduce you to, nice transition, to Diane Rosenkrantz. She is the senior consultant with Tenet Financial. So welcome, Diane.
Thank you. Are you able to advance the slides?
I am. Just, you know.
Okay. Yeah, unfortunately, they're not showing here. So happy to be able to talk about funding. We'll review some common funding options, and therefore, I personally have been with Tenet Financial Group for the last 10 years. I work with clients all across the country, and the goal is to try to share with you the most common funding options, how certain particular options might be a fit for you, and be able to answer questions or myths or additional information going forward. So as you're advancing the slide there, the next slide here is a really great image where it's letting people know that you really should not fear funding. There are going to be many options and many paths that are possible for yourself or your funding partners or other family members, and therefore the goal is to try to determine and in essence pull back the layers of the onion to see what might be a fit for you. The reality is for funding, on the next slide, is that there's a couple paths. There's contemplating the debt funding option, such as a loan, where you're borrowing the money, or literally the equity option, where you're gaining access and using some of your own funds. And then for many people, they're able to actually use a combination of those. And that's where things become more feasible for many candidates. The next slide here is reviewing the most common options for people when they are investing in a franchise. One option is an SBA loan, and we'll want to get that on the slide. And then there are also a couple of different types of SBA loans. Another very common equity option is called a 401k IRA rollover. And what's very interesting about this option is it's allowing you to preserve your cash. You're able to literally buy or invest a business without any debt. And this is feasible if you have pre-tax retirement funds. IRAs and 401ks are two examples, but the key is you could then use these funds without incurring an early withdrawal penalty and without taking a taxable distribution.
When you do the IRA rollover, could you have multiple accounts? So, you know, my husband's military, but he was also a teacher, so he might have several funds.
Absolutely. What's great about this is that you personally might have one or more IRAs or a 401k, but if you're going into the business with a family member, a spouse, a friend, literally you are then also able to gain access and use some of their funds. So as long as they are not with a current employer, when you mentioned military, that would have been relevant if someone had separated from service, if they are active duty military, if they are currently working for a company, they are not able to gain access to those funds unless they've separated or retired if it was a company-based retirement account.
Okay.
Good question. So in this method, again, this is an option that is a non-debt option. We at Tenet would set up your new entity. We would form the corporation and we would create a new 401k plan for your new business.
What type of corporation is that?
That does need to be a C corporation. The IRS mandates that in this rollover option, a person that wishes to use those pre-tax funds must be a C corporation. And we would therefore set up the candidate's corporation in whatever state they wish. We would get the articles of incorporation, the tax ID number, the minutes and bylaws, all of the details.
Okay. And then step two?
Step two is that this is going to enable you to gain access to those pre-tax dollars. They would leave where they are today and they would go into a new 401k that we would set up for your new business. The next step is that when the 401k is funded, you're able to then use the money by enabling it to be wired into your company bank account, where within a matter of a few weeks, you have full access to the money that was previously in an old retirement account. You're able to then use the money for any business purchase, any business expense, and giving yourself the freedom and flexibility to fund the franchise.
Can you borrow against that money?
In this particular scenario, you are not borrowing the money. The money that went into the new 401k is actually investing and buying stock of the company. But if a person rolled over a substantial amount of money, it went into the new 401k and they funded the business with some money, they could take a loan from a portion of the money in the 401k if they wanted to, but that would be in addition to the fact that they have moved money into the company bank account for their business expenses. A loan would be a personal loan above and beyond the funding of the corporation.
Okay.
So again, the money ends up in the company bank account and viable for any business expense, including paying salary.
That's great.
So with regard to this option, it is not a distribution. It's not a loan. People are not borrowing the money. They're investing in their very own business, gaining liquidity without incurring an interest rate, without it being a loan.
Okay.
From here, the key points are just to give a slight overview. This rollover option is viable if the pre-tax dollars are in an IRA, a 401k, an annuity, a thrift account. They must be before tax. So for example, if they have an IRA, it cannot be a Roth or an inherited IRA. If it's a 401k, it must be from a prior employer. This rollover option is only going to make sense if the person has $50,000 or more. That could be in more than one account. One family member might have, let's say, $40,000. A spouse might have $35,000 or $50,000. So each account didn't need to be 50, but certainly the rollover would make sense if person's using 50,000 or more. And this funding option is generally about a 3 to 4 week process from start to finish.
Uh-huh.
So now we can just draw our attention to a closing comment regarding this. A person who funds in this manner is going to be able to now contribute to the company qualified 401k plan, meaning they could defer money and it can grow in their 401k account each and every time they take a paycheck. So you are putting more money into the qualified plan that you had used to fund your business.
What are the tax rates?
Well, the person's able to tap into the money without incurring a tax penalty. Regardless of how old they are, they're using the funds on a before tax basis.
Okay, and then when you say profit share plan, and
Yep, we're setting up a 401k profit sharing plan. That's going to allow a person to participate through deferred salary, putting money into it, and also if a person wants, they can do company match contributions or profit sharing contributions, giving people greater flexibility. Lots of options and a lot more detail that we could go into on follow-up calls, absolutely.
okay, that's great.
So now to draw our attention to other options that have nothing to do with an IRA or a 401k. This option is regarding SBA loans, Small Business Administration. There are many types of loans. This is a loan where if a person is looking for $150,000 or more, this is enabling you to borrow 75% of the total project cost. The lender is looking for you to contribute 25% of the project with your own cash. They may be looking for collateral. They're looking for credit scores of 685 or better. You'll need to show the lender your business experience, your background, your business plan. You also must have what they call proof of repayment. You've got to show the lender that you've got additional funds, whether it's in a savings account, checking account, stock accounts. You need to have some cash reserve in addition to the funds that you're putting up for the loan. Just on average. What's that?
Could that be home equity? No, you said it's cash.
Home equity is borrowed money. A lender will not allow borrowed money to be used as the cash injection or as your reserve. So it must be non-borrowed money. a loan that is a larger loan might take a few months to close. It depends on how quickly a person gets their location and their lease agreement. And the lender would only be able to entertain an individual if they did have a bankruptcy, it would need to have been discharged 7 years ago or more.
Okay, and so it takes 3 to 4 months to close. Let's say they wanted to go through training to get started, so they wanted to pay the franchise fee. If the SBA, if they knew that they were paying money in, would that count towards their non-borrowed cash injection?
Absolutely. Excellent question. Absolutely. For someone that pays their franchise fee out of pocket with their own money, that is absolutely going towards their non-borrowed cash injection. That would then allow them to go to training, get their training certificate, and these paths can take place at the same time. As they're paying the franchise fee and getting ready to go to training or at training, tasks within the loan can be worked on simultaneous.
Okay, and so I heard that with this loan, so what you have is, for us, they would need $37,500 invested for $150,000, correct?
Well, again, it depends if they wanted additional working capital or whatnot, but
Right.
yes, they would ultimately need to have 25% of the total project, including the build out, working capital, materials. So they would need to forego and use that amount of money, and they'd also need to have some cash reserves for this SBA loan, which is called a 7A loan.
Okay.
And the next slide shows another loan that's a little bit different.
Okay, real quick, for a business plan, we have like a generic business plan, where they can fill in information.
Sure.
Do you have people that you work with that can help somebody with a business plan, or?
No, the individual would need to simply tweak your shell to meet their own needs based on where they're going to be opening or what experience they have or what other types of businesses are in that vicinity, or they might want to speak to a prior or a current owner. The lender is not able to actually do that. We do have a resource that can help a person start to finish create a business plan, but that might not be needed, and therefore that might be an expense that a person could save if they provide their resume and business experience in lieu of a business plan.
Uh-huh. And what's a typical SBA loan length?
It is always, no matter what, a 10-year loan, no matter what type of SBA loan, whether it's a working capital loan or a 7A loan, it is a 10-year loan for all people with no prepayment penalty.
Okay. And if they're taking out $150,000, then they're paying maybe $2,000 a month?
Well, a person could literally go to a quick mortgage or funding calculator currently, and the rate could change, but right now the rate is 8%. So a person would go to that calculator, put in 10 years, put in 8%, put in the 150 or 160 or 120, whatever it may be, and they will see an exact amount based on that size loan and that current interest rate.
Okay. And like you said, if they want to pay early, if they want to pay it off early, there's no prepayment penalty.
Exactly. No prepayment penalty at all.
Okay, good. So I'm on the next slide for the SBA Express or the veteran loan.
Exactly. So this is a loan that is called a working capital loan. It is also a small business administration loan. It is also backed by the government. This loan can go up to, but it cannot be any more than $150,000. So depending on a person's build out or location, or if they wanted additional liquidity, would determine whether or not this loan would be feasible. With regard to this loan, a person needs to put in just 11% non-borrowed cash injection. They don't need to have equity in their home as collateral, but they do need to have shown that they have owned a home. It won't be used as collateral, but in order to qualify, they need to show that they've got a larger breadth of credit worthiness. 685 on every credit bureau, some business experience or resume, and that repayment ability, they must have 20% of the total loan in reserve. If it's a $150,000 loan, they must show that they've got savings or checking or stocks or bonds, etc., that are $30,000, so that the lender can see that that loan is going to be able to be repaid beginning the very next month.
Mm-hmm. What if they have retirement? Because, you know, they get...
That, if they're getting like a pension or a retirement after they've left their job, that goes towards their liquidity. That goes towards their, in essence, earnings and cash reserves. The big distinction of the SBA Express loan on this slide versus the one before is, again, that this loan can never be more than $150,000. It cannot be used for a resale business. It cannot be used for any build-out expenses. So if a person needed to do electrical or plumbing or other furnitures or fixtures within the four walls of the space, they would have to use their own money for that. The SBA Express is a working capital loan, cannot be used for any construction, which is a great differentiating factor, whereas the other loan can be used for build-out expenses.
Mm-hmm. What if you own the building? So I think they don't want you to put money, you know, invest money into someone else's property. What if you owned the building?
Well, certainly if you own the building and you've got your own funds that you're doing the build-out for, you know, that would not, you know, affect this.
Yeah.
Yep.
Okay, good.
So the premise here is that there are a couple of different options. There's using your own money, your family or friends, or if you're just trying to fund and you've liquidated other accounts in the past, savings or checking or stocks or bonds, that's one option. Another option is the loan, where you're borrowing the money, and there's different types of loans. And then the other option is if a person did not want debt or did not want a loan, and they wanted to explore the rollover funding option. If you have before tax IRA or 401k type funds, that becomes a very, very viable option. But every single person is individual. Every person has different types of cash or credit or backgrounds. So analyzing a person's financial abilities and potential is a one-on-one conversation we can have to help determine what your various options may be.
Could you do both? Let's say I had 60,000 in, you know, available from a 401k, but I need 100,000 more for a business.
Absolutely, absolutely. Therefore, in that scenario, a person is using a combination of funding, and absolutely it is very common for a person to do a rollover for part and a loan for the other part. Absolutely, yes.
Okay, I didn't know that, so that's good.
Perfect. So that is, oh, go ahead, Tanya.
Oh, I was just going to say, you know, thank you so much. I have your, I'm on the slide with your phone number and email. And my contact information as well. So we hope that this information helped. I learned something. And thank you so much, Diane, for helping explain some of the financial information, which obviously is really important for candidates that are interested in seeking financing. And hopefully this will help get them connected to you, so that they can get more of their questions answered. So thank you so much for joining us today.
Oh, you bet. Well, thank you so much, and have a great rest of the day.
Thank you.
Bye now.